Our next guest has designed a system so you can build a property portfolio from scratch and on an average household income that will eventually allow you to retire comfortably on $2,000 a week. Joining us is Ben Kingsley, property expert and author of Armchair Guide to Property Investing. Good morning to you. So how do you do it?
Well, Pete, that's the million-dollar question, isn't it? I mean, at the end of the day, each household's different. So rather than a sort of a shoehorn approach where we try and fit somebody into one particular strategy, what we believe in is actually working with a lot of frameworks and systems that will help investors maximise their returns. And one of those systems is what we call the property investment formula. And it's the ABCD of property investing. And so A standing for asset selection, so we need to get that right. And in terms of borrowing power, we're going to have to borrow money, so we need to look at how much money we can borrow and what sort of strategy we can use around lending. And then we've got to also look at the household budget and make sure that we've got the cash flow right, because property investment is a long-term investment, so we don't want to be in it for 5 minutes and potentially lose money. And then finally, defence. Defence comes in a couple of forms. You know, whilst we're building the property portfolio up, we need to make sure that we've got that passive income protected, so we need to protect your insurances, so personal insurances, but we also need to protect the asset in terms of landlord insurances and the like.
OK, so as you mentioned there, asset selecting is the first step, but how do you know which asset is the right one?
Yeah, look, that all comes down to research. There's lots of markets within markets. And when we look at different households, we're looking at that different income. So for some clients, obviously lower income earners, what we're actually trying to do is to look at yielding properties. So trying to find that income where the rent is high enough to sustain the mortgage and then obviously turn into positive income and passive income over time. For those people who've got slightly higher incomes, we would then look at, sort of capital growth areas where we get the growth and the income as well. So again, it's about a tailored solution based on each person's circumstances.
How many properties are we talking to reach that $2,000 a week target?
Yeah, Pete, it's going to be different again for each household. But what we would normally say, rule of thumb, is between, say, 4 and maybe 7 properties. So you're going to be building that up over time. So when your cash flow and your household budget can allow for that next purchase to happen, it's all about planning that process.
Is there stricter lending criteria at the moment that might be putting investors off?
Yes, there is definitely stricter lending criteria, and that's come with APRA. They've basically made some changes to try and make sure that we don't get into an asset bubble. So what we're actually seeing is maybe some of the sophisticated lenders who are gearing themselves quite high are seeing challenges around the types of borrowing they can do in that particular space. But when we get to the first-time investor, it really is going to come down to their household budget. So there's still plenty of opportunity for those people to invest, and that's why we think investing in property is a process, and we've come up also with a 5-step process to be able to do that, and it's really about getting the basics right. So firstly, you want to basically clarify your current situation. Then you want to look at how you're going to evaluate that. So what are the opportunities that you see and the potential that you see in doing that? And then you formulate a plan, and that plan is around getting that cash flow management right, making sure that you're able to execute when you say you're executing, and making sure that you're not overspending on that discretionary spending. Then it's about implementing, coming back to that asset selection point around making sure you do your research. And then finally, it's about reviewing that. So as you're building up your portfolio, you need to make sure that you're looking at each particular milestone so you're hitting those targets.
All right, a lot of good, important information. Thank you very much for joining us this morning.
Pleasure, Pete.
Okay.